So diversification. I know you guys are probably annoyed. I'm always saying diversify, asset allocation, and make sure it's not all your eggs in one basket. But I gotta stress diversification. Now, a lot of people have different opinions really on being diversified or like how much you should diversify. But it's always a topic, so like it's important. And not just that, it's really different opinions because everybody got a different type of strategy, really. So like, if you want to be more conservative, you're gonna diversify more. If you want to be more towards like growth, really, you're not gonna be as diversified. A lot of people might be surprised when they figure out that Warren Buffett didn't really have a big stance on diversification. He thought diversification was actually for the ignorant, and for the raise in volume basically of the new retail investors. We got a lot of new ignorant investors. So diversification is a must. So Warren Buffett just thought like 3-5 stocks were good enough basically. If you knew everything you needed to know, like their numbers were good and reputation management, all that was good, that's all you needed. There's no like, what's the point of having all these extra stocks? Like he thought like these colleges teaching all these formulas and all that stuff was actually useless, and you didn't really need to do all that. And basically everyone's making this investing stuff harder than it seems, and it's a lot more simpler than you guys expect. Now, one of the main reasons why you should be diversified is to hedge for different situations, really. Like Charlie Munger always says, you gotta treat daytime and nighttime the same. So you gotta keep your strategy. When everything's doing good, it's a boom market, you gotta stick your ground, stick to your investment strategy. When everything's going downhill and everything, hopefully you took a conservative stance, stick your ground, and you gotta keep going with your strategy. So if you weren't greedy and you diversified your portfolio and your asset allocation was good, really made sure you hit all the sectors, all the different types of investments, then you were ready for the bear market. You know, basically investing, there's always going to be times when it's a bear market. So it's a lot easier to stick to your strategy when you have a more conservative strategy like this, especially when you see, hey, it's paying off. And when it's a bear market, we're not taking such a hit like all these other people that were greedy trying to make a little extra quick dollars, you know?
So everybody has a different stance on creating basically the perfect portfolio. Some people think you should have a majority in stocks. Some think you should have the same in stocks as bonds. Something, the portions are always different. And there's no right or wrong. It's basically on your strategy. How much risk are you willing to risk? How much reward you really want? Like, how optimistic are you in these markets and with these businesses you got? Now, I'm a firm believer in diversification, but Warren Buffett, I love the dude, but he takes a different stance. He says diversification is protection against ignorance. And it makes little sense if you know what you're doing. So like, he thinks if you got 3 to 5 like stocks, really, that's good. As long as you really know these companies, really know their numbers, that's all you need. You don't need a certain portion and anything like that. He even believes like all these formulas like these college universities are teaching, they're pointless. Like, it's not as hard as you think, and you're just making life harder. You really are when there's the S&P 500 if you're not investing because you don't know. The S&P 500 equity index made up of the 500 largest companies traded on any of the top, traded places for stocks. Like NASDAQ, NYSE, it's these little checklists right here are what these companies need to be in the S&P 500, and if you have these in your company too, you're a good company, you're not volatile, you're moving with the market, and it's a good company. You're not over here risking, really. The risk is low. Not even just that, but like, if these companies for some reason, boom, earnings go down, growth goes down, and they don't meet this checklist anymore, they're out. And then S&P 500 finds the next best company, and they're in. Now, you can see from 2000 to 2020, these are the stocks that were like basically made up the S&P 500, and it is constantly changing over time. But you can see there's companies still around. Like Microsoft was there the whole damn time. But hey, if you don't know what you're doing, invest in the S&P. 100% even. That's what I would say. Now, when you're making a portfolio, you want to know like what percent should I put in for each stock, and it all depends on basically, like I said, how much you're willing to risk. Now, Warren Buffett, here's how much he has of each stock for his portfolio. I know I said he had a stance on 3 to 5 stocks, but he got more than 3 to 5, and so does Berkshire Hathaway. Now, majority is Apple, no safe bet. Then he has a lot of finance and consumer staples stocks in there. Now, you just take that into consideration. You don't copy what he's doing. You just see what he's doing and why he's doing it, and then hey, maybe do the same. But then, most people, they believe you should have a majority of your investments in stocks. And then after that, have a nice chunk for bonds. Mutual funds would also consist of bonds, but it's actively managed, switching up, But they don't have a nice a return like stocks do, but they a nice hedge against like market crashes and shit like that. Now, next, what's really a good hedge from market crashes is commodities like gold, especially. You want a nice chunk, maybe even more than 5%, like I'm saying, in that. And then after that, crypto, that's for the future. It's speculative stuff like it's risky. You don't want a huge chunk of your portfolio to be crypto, but you diversify portfolio. You're gonna have crypto. It's 2022. Everyone's coming to terms with it. Not Charlie Munger. And then for the rainy days, you need some cash. You want to make sure you can always buy the dip and you're not investing all your money. So you got some cash. Alright, so you don't want to have just like breaking down the asset allocation of the portfolio by like stocks and bonds like that. You also got to break it down for the asset allocation even deeper, like for the stocks, for the bonds, for the commodities. So when you're getting stocks, you want most of those stocks to be like large cap blue chip stocks, like the Apples, the Microsofts, but not just all tech, like the United Healthcare, or what else is there, like Coke and Walmart. You need big large cap stocks, not volatile, Then after that, another chunk, which should be a bigger chunk of your portfolio, another non-volatile set like strategies like dividends and REITs, which is like real estate. So you're gonna get like definite payments, it's moving differently than your other like assets of stocks, and it's just a safer bet. So this is for like more conservative investors, and for a time like this, you should be more conservative. And there's always gonna be times like this, so why not be conservative, But then you can't be too conservative. You gotta risk it a little. So a little portion should be for like your value and your growth stocks, more so value. But growth stocks definitely should take up a little percentage of your portfolio just for the big returns, And then a little bit for speculations as well. But you see, you want to gamble or you want to invest. We're making an investment portfolio, so a little portion for those speculations. Now, like I was saying, commodities, a big part should be in gold to like counter these market crashes and shit like that. And you want like other metals too, not just gold. You want like silver and copper because they got their times too and everything. And then you want not 25%, maybe a little. It all depends on you really. But a nice little chunk too should be in all these other commodities, or just an ETF maybe that manages all the commodities, which they do have that. And it's right there, the PDBC. Now, it's up 20% for the year, while the S&P it's down like 10%, for the year. Now, this is why you want to be in commodities like that, to hedge for situations like this, Gold. Be in gold. So I know investing in bonds isn't really interesting, or nobody really wants to invest in bonds. They don't got a return like that. But you need investments like that. That's why you got cash, You got bonds too. When you're investing in bonds, like stocks, you want different types of bonds. Now, you always gotta look into the short term and the long term. For each type of bond too, you want both. Now, for mainly in bonds, you want government bonds, state and federal too, all that. You want TIPS, you want high yield municipal bonds, You getting each of them. Like a majority of your bonds should be these government bonds, because you're already investing in corporations, you know. Then after that, you get a little bit of corporate bonds too. Nice little chunk should be, but like more than 50% should definitely be government bonds, and then less than like 20% should be junk bonds. You know, just have a little bit here and there, but short term and long term. You know, and make sure like these little pie graphs show. You need not just U.S. bonds, but foreign bonds as well, different types, you know, emerging market, like for the currencies. But hey, stay away from Russia, you know. Now, crypto. Everyone's came to terms with crypto and got a little portion of their portfolio, whether it's big or small. But I would be preaching, keep it little, you know. It's speculation. But Ethereum and Bitcoin, they're not really speculations. You know, like, look at this. Top 5 Bitcoin owners. You got Tesla and Square up there. Everyone knows them. And they got a big chunk. And they, not even do they believe in it, but they can influence the use of Bitcoin. Not even, just fuck that. Like, Ethereum already got a use, really, too. Like, look at all these companies, like NFT platforms that are using Ethereum. Now, not just NFT platforms, but there's also use for NFTs, like the metaverse too. And they have crypto, like Decentraland and Sandbox. So, like, I wouldn't put that much into those type of crypto, but I would definitely have like a nice little 10%, you know, something around there for a play like that, because the metaverse is new, it's gonna grow, and you need those cryptos to buy anything in there. So there is a use for that. Now, also, like the same amount of portion for like those little metaverse coins, this should also be like maybe like a little like low market cap cryptos, like the Solanas of the cryptoverse, cryptocurrencies, you know. They're all the same, crypto and NFT, and it's just a huge little hype. But that's what I mean. And stocks like that, this whole sector is getting hit the most, and that's why you want to be a little bit of your portfolio. But they have like some non-volatile cryptos too, kind of like dividend plays for them, and like the algorithms. And I believe you should definitely have a little portion for that like type of crypto as well. Like, hey, free money, that's fixed. I'm about that.